Hello and welcome back to Technical 101. We're joined once again by Daniela Hathorn, Senior Market Analyst here at Capital.com. So let's dive straight in. What are we going to be looking at today, Daniela?
So we're going to be looking at two of the most basic concepts in trading, which is support and resistance.
Cool.
So essentially they are chart patterns that you can draw to help you bring attention or highlight certain areas within a chart that you deem a little bit more of importance, whether it's within your strategy or because you've seen those areas highlighted in the past and you feel like you really want to focus on them within that strategy.
So are they key levels on the chart that you're kind of looking at?
Yeah, so essentially they're just levels that you can draw. It's not a set indicator that, there's a calculation to or whatever. You just identify certain points on the chart that you find are relevant or interesting. Maybe you've seen the daily candlesticks bottom out there a few instances in a row, and therefore you think that that's a good area of support. I think the best way to understand this is to jump onto the charts.
Cool, let's do it.
Because they are very much intuitive.
Yeah.
So for example, this is the daily chart of the Germany 40, which is the German DAX. And I've got a few lines here on the chart already painted that I'll use. For example, if we look at the most recent data, this line here, this green line, this is essentially connecting the lows from back here in July and also in August, and potentially looking at connecting it once again if this price goes lower. So as I said, this is a trend line.
Yeah.
And this automatically can be support. So support and resistance realistically are any line on a chart that you want to paint that feels that connects certain dots.
Yeah.
And if you think about logically, let's talk about a share, for instance. A share price usually falls because there is more supply than there is demand. So essentially, investors may believe the share will fall because of fundamental reasons, technical reasons, their value drops because of their earnings, whatever it may be. Essentially, the price of this asset is expected to go down. Now, during this trend, there is usually people waiting on the sidelines, looking at a certain level on a chart to jump in at the opportunity to buy, whether it's a certain price level because they believe at that point it's oversold, whether it's a certain level that they've highlighted because in the past they've seen it bounce off this area, and essentially that is what support and resistance are. One is the opposite to the other. It's just areas within a chart that you believe in the past you've seen price action that's interesting and that could warrant that to happen again.
Okay, cool. So is this a support or resistance? Is this a support line?
Yeah, so support are those to the lower part of the current price, and resistance is the opposite, so at the top part. So usually when you talk about support and resistance, you think about it in the trend, in an uptrend, so in a bullish trend.
Okay.
So if the prices are going up within that bullish trend, resistance is where those buyers are going to struggle to push higher.
Yeah.
Whereas if it's support, it's where those buyers essentially going to see support coming in and helping it to bounce higher potentially.
Okay, so for example here, obviously you've drawn the line here because it's touched this line, it's touched it again here, but it's bounced straight back up.
Yep.
So then would you be kind of looking to see this candlestick coming down here, and potentially as soon as it hits this mark, you might see a bullish move back upwards again?
So I think with any indicator or chart pattern, it's great to use with other stuff. For example, the RSI is a great one to use. We've covered the RSI in the past. But essentially, you're looking at this chart and it's only touched twice because of prior performance of the price or whatever. You may think that it's going to bounce a third time, or you may actually be inclined to believe that it's going to fall through, so break through this support and therefore continue to go lower. That may be your entry point. Maybe you're thinking, if you're a buyer and you believe it's going to bounce off, you'll be thinking, okay, as soon as it hits this price, I'm going to go in as a buyer and kind of try to ride out that reversal higher. Conversely, if you're a seller and you believe that it's going to break through support this time because of your analysis, because the RSI is showing that there's still room to go, it's not oversold, but that fundamentally you believe that there's more weakness to come, then you may say, okay, well, this is my entry point within a short trade.
Yeah.
So it's just, there's no set rule as to how to use them. It's more how do they complement your analysis. And for example, this is a very recent one, but if you zoom out a little bit more, and we go, for example, here, this is back in the end of 2021 and beginning of 2022.
Yeah.
As you can see here, this key area, which has been marked, and we can highlight that just so you can see. So if we highlight with a rectangle here, this area that I'm showing you, you can see it bounced up to, what is that, 6-7 times before it actually broke lower.
Yeah.
So in this case, this area was very, very, very important, and you may want to highlight this area in the future as well. So as you can see, for a period of, what is it, from April till February, so 10 months, we saw this area acting as a really, really tough support. Sellers weren't able to break below it, and therefore, as a trader, you could have taken this point into reference with your trading and used it as an entry point, an exit point, to test the appetite for the sellers to come in, to buyers to come in, and eventually it did break below it. And then in the subsequent months, you can see it actually turn into resistance once. So again, you still have this point in mind. Just because you've broken below it once doesn't mean it's completely invalidated. Yeah. But one of the things with support and resistance is the more you bounce off it, the weaker it comes, in the sense that the more times you bounce off it, the more you're expecting it will break it at some point. Yeah. And as I said, it's great to use it with other indicators. So if you look at the RSI, for example, you can have a look. Okay, well, every time we touched it, we weren't actually really that close to the oversold territory. So we saw a little bit of a bounce here. Yeah. When we did actually break below it, you can see we dipped there below the 30 line. So it just gives you a little bit of indication as to how to use these support and resistance areas.
And is there can you use it on any particular time scale? Is it better for kind of longer time scales? Obviously this one was 10 months. Yeah. Can you use it on a kind of intraday time scale, or is it better for longer periods?
You can use it on whatever you want, because you draw it. So you select the points and you draw the line. Of course, I feel like the longer the time frame, the more validity it will have, in terms of it's just going to be backed by more data. Yeah. Obviously in a 5-minute time frame or 1-minute time frame, everything becomes so obsolete so quickly, that it may be harder to connect dots with precision to actually trade upon those. So I feel like the longer time frames probably make a little bit more sense. Anywhere from 4 hours to a day, maybe even an hour chart, you could use it for more like short-term trading. But essentially, as I said, it's not a calculation, it's just you drawing whatever you want on the chart. So yeah, you can use it whatever you want.
Okay, cool. And just to bring it back to this bit here, so obviously it broke down through, it's touched it seven times, it's gone straight through, and this now becomes its resistance level. Yep. So it's gone through the support, and then that support line becomes the resistance. Yep. And so it's still relevant, it's still a key point, it's just on the opposite end of the scale.
Correct, yeah, and a lot of time support turns resistance, resistance turns support. Yeah. It's just levels on a price, on a chart that seem to have something more to it, and a lot of times it's psychological levels, like for example on gold chart, the $2,000 per ounce level, that's very significant. The S&P 500 has its psychological levels. All charts pretty much have the psychological levels. With currencies, a lot of times it's like the 120 or the 110, the 115. Those are usually quite important levels to watch out for.
The dollar yen, the 145, or whatever it is.
Essentially you just look at, the pattern, and for example, I will have these charts drawn now to the point where if we do come back to that area in the near future, I'll just keep them in mind, and you can see as we've gone along, there have been instances where we've seen it come into that area of support, and we saw a little bit of a reversal. Again, it acted as support for a next bounce higher, back again here in March this year. Again, a lot of focus on that area once again. So you always kind of have it in mind, and if we do have a reversal from these levels, let's say we break below this ascending trend line, then I'll look at this area again. Is that going to provide once again that support? So yeah, I think there's certain levels that are always on the mind here. Same with a little bit lower back here, when we saw that downtrend again, we had another area that was very interesting. We saw a lot of sideways trade consolidation within it. So it's just areas to look out for in a chart, really.
And you drew the rectangle just over here.
Yep.
Is there any basis on how wide you make that? Is that like where you place your trade between those?
Yeah,
do you give yourself a select period on the chart of time?
So for me, it's just looking at the behavior of the chart. So for example, the rectangle I've just drawn, pretty much, if we take it away, you can see I've just drawn it on the previous lines that I had. Yeah. So for example, this lower line, it was connecting the lows from 13th of May 21.
Where the lowest candle was.
And then the top line, it was connecting other areas where I've seen interest. So for example, here, after seeing a low, we then saw the next low here. Again, here and here, we bounced off that line. So it's just connecting certain lows or certain highs on a chart that you feel over time have drawn a lot of attention to that price.
So you've almost got a small kind of window where you decide whether you're going to enter the trade or not, and it might bounce a little bit in there, but that's the sort of window where you go, okay, now I'm going to place my trade.
Yeah, it's quite hard to look at now retrospectively and know what I was feeling or the trader was feeling at the time. But it's also, as I said, support and resistance are great as areas where you draw attention to. They're great as entry and exit points, stop losses, take profits.
Yeah.
But you have to make sure that it goes in line with the sentiment that you have, whether you're using RSI or whether you believe that fundamentally the DAX is oversold or overbought because of X, Y, and Z, because the ECB, because of rates, inflation. So it's great that when you have a view of the market to use these points as kind of to back that theory or to find entry and exit points. So as you say, just looking at these in isolation of the chart retrospectively, it can be maybe a bit hard to understand the feeling behind them.
Yeah.
But when you're in the moment and you've got price nearing this level and you've marked it in the past and you're feeling like a reversal is about to come, then usually these areas do really come in handy.
Okay, and is there any key drawbacks to using support and resistance?
I'd probably say the main one is that it's all down to interpretation. You draw these lines yourselves. As I said, it's not like indicators that have a calculation. Moving averages, they're given to you, right?
Yeah.
It's all about how you read them here. It's not only about how you read them, but how you draw them.
Yeah.
And not every line that you draw is going to be support and resistance. So I think that's probably the main drawback, is that it's so broad, and no two people may have the same support and resistance. And some of them are very obvious, and you'll see a lot of analysts, using the same one because it's quite intuitive. But at the end of the day, the main drawback is it's all down to interpretation, and of course, sometimes that can be incorrect.
So would you say this is one of the kind of, if you were first introducing yourself to trading, this would be one of the most kind of simple introductory strategies that they could use?
Yeah, I think so, because you don't really need to understand anything, because in some of these indicators you need to understand the calculation. Or what does this line mean over this line? What does this percentage tell me?
Yeah.
Whereas this, it's just intuitive. You look at a chart, you see an area where price has bounced off a few times, bam, that's your support, that's your resistance. So it's probably one of the most intuitive chart patterns to use.
Okay, amazing. Well, I think I get it. So I hope that gave you a good understanding of support and resistance. And don't forget to comment, like, and subscribe.